Hi everyone, hope you're all doing well, and today we're going to talk about the 5 stocks that I have been buying huge over the last kind of 2-3 weeks since we've gone into this kind of stock market growth stock pullback. These are the 5 stocks that I've been really focusing on. So with this big massive sell off in the growth stocks, there was so many opportunities, like it was so easy to kind of go, that's on sale, that's on sale, that's sale, and buy like millions of stocks because there's some really good companies out there that were massively sold off. But I tried to prioritize the 5 that I thought were amazing opportunities, market leaders that were probably sold off a little bit more than the other stocks, and I tried to buy them stocks in particular. So there's a couple of companies that I really considered, and like Gang and Hughes and stuff like that, but for me them companies are great companies but not as good as these market leaders that were sold off, and I bought them opportunities first, and then further down the line, if these companies recover and I have the opportunity to go buy them companies that are still sold off, then I will do. But at the moment I wanted to keep my focus on just the companies that I think will do future 50 billion, 100 billion companies that are currently valued at 10 billion or less, or even 20 billion or less. So those were the opportunities that I actually focused on, and I realized I haven't actually updated the channel what I've been buying that much. You guys on the Patreon, obviously you guys will know what I've been buying when I buy them, because I put buy and sell alerts out. If you do want to join that, the link is in the description. And yeah, there's a lot of other stuff on there, like private live streams. We do like education videos on there, portfolio reviews on there, so link in the description to that. And if you do want to start investing, there's some brokers in the description as well. As well as that, we did do the 10k live Q&A session last night. It was a little bit late. I think I did it at like 10 o'clock, so some of you guys might have missed it. You might have actually been having an exciting Saturday night rather than watching YouTube. But yeah, it was a little bit late. It was supposed to be a little bit earlier, but I went to the traffic centre and got stuck in traffic. It should have been about 8 o'clock, but yeah, it was literally gridlocked for a good like nearly 2 hours ish. I was quite late getting back, but yeah, and one thing I thought would be really cool, and I would like to get your guys' opinion, as well as let me know what stocks you want, stock market videos you want to see this week on the channel. I'm a little bit short on ideas. I've got a few ideas that I'm kind of going through, thinking about doing some free UK stocks to buy, free US stocks to buy, some education videos, maybe talk about Team 17. That's a UK stock that's sold off a little bit recently. But yeah, let me know any other videos you want to see, as well as smashing the like button and subscribing. But I was looking at one of these earlier, and now I looked at the price and I was like, okay, that's a big jump. But I thought I am actually considering maybe removing the whiteboard and actually getting one of these smart boards, because I thought what I can do is, like, when I do these sitting down videos, and what I'll do in a second when I start talking about the 5 stocks I've been buying heavy, is that when I show you this, I could actually go back to my standing up like whiteboard videos, but rather than having to read my scruffy writing, I can actually put like the charts up, and I can be stood up and doing this rather than sat down, because I prefer to do the video stood up. But sometimes it's good to sit down because I can do this sort of stuff. So yeah, that's something I'm actually considering getting. So let me know what you think about that one. It probably won't be anytime soon. It might be something towards the back end of the year, but I feel like always want to make sure the channel progresses and not stand still. Try and from what you would have seen a while ago, them yellow videos and the awful sounding videos, try and always improve the sound, the visuals and everything. So I think that could be a cool step up, I think, maybe towards the back end of the year. So let me know what you think about that. But anyway, we're 3 minutes in, and we're not talked about these stocks yet, so let's get into it. So the 5 stocks that I've been buying heavy recently with this massive growth dip, obviously we're looking at the first one here, which is Teladoc. So Teladoc for me was a company that didn't really interest me. I found out about this company probably around about early mid 2020, as soon as the whole CV situation kind of happened, and yeah, it had a bit of a run up. Obviously, it went up 60-70% ish. I mean, even there, when we kind of had that growth stock boom that was put valuations just way too crazy, even jumped up a little bit there as well. But historically, the company's historically trended up in the right direction, nice and slowly. If we went 2018 to 2019, put in a decent year, and I think that was actually not a great year for the stock market as well. Even 2019 to 2020, another decent year, up 72%. So if we go 2017 to 2018, nearly 93%. So this company normally has a pretty decent year. Once again, just a sensitive stock of like growth stocks, where when the stock market goes up, this is a stock that will outperform market, but you also have to be aware that when the stock market goes down, this stock will probably go down, as you can see here, a lot quicker than what the market does. And you've just got to be careful of these sort of situations when you buy stocks like this. But it's normally a stock that has done historically pretty good. So yeah, you would think that even if it wasn't for the CV situation, we should have seen a pretty decent year, I guess. And we went into 2020 at $83. We would have been probably $100 and something stock even without the CV situation. But yeah, obviously the CV helped it, and let's not forget that you think about Teladoc, it's brought so many customers forward because of the CV situation. A lot of companies. The thing with, as well is like Teladoc is very different in the UK. Like, we guys always imagine like the health service that we have, which is NHS, which is amazing. But if you're from the US, you've got to pay for your health service. And what as well happens is a lot of like companies that employ people will actually provide a health service as well. So you've got a lot of companies that come to use this. Obviously, it's great having virtual healthcare as well now, where you don't have to actually go. I think like 95% of cases actually get solved through the virtual healthcare service. I think only 5% actually go to actual appointments. And as well as that, Teladoc as well, they've used the market leader, first mover advantage. They've used that massively, and they've expanded their service, what they offer, hugely, faster than what everyone else is, cover a lot more segments, especially with the Livongo purchase they actually made recently as well, and that's going to help them. But yeah, I mean, even if it wasn't for the CV situation, we would be talking probably about $140-ish a share, I would guess. And yeah, we're about that right now, and that's not including the big massive boom and the Livongo purchase they've made. So we're kind of looking at this sell-off now, which from the 52-week highs is 52%. As well, this is why you've always got to be careful about your valuations, because that was a crazy valuation. And we've got a little bit of an opportunity where we're getting the company at half the price what it once was at the start of the year, and I like that. I like this company because of a lot of these reasons. And then when we dig on to the financial side of it, it's about 20 billion company right now. If we look at what they're doing historically on the, even to have a growth stock like this and Simple Wall Street to have it undervalued, it's definitely crazy. You look at the growth side of it, you can see here the company has steadily grown growth and moved in the right direction. Should put in some decent amount of revenue, looking like a 2 billion revenue year this year. So that's 10 price to sales, I guess, which is pretty decent for a growth stock. I like if I can get it around that 5 to 10 range. If I can get it under 5, that's even better. And yeah, you look at the company, it's still going to be putting in amazing growth. Obviously, the big slump here, historically, it's managed to grow revenue and keep as it expands, which it has a lot of expansion to do, and expand its services. It is going to have a few losses until it gets to profitability. And obviously, the big drop off here is that it's had its massive surge of customers, but as well as that, the Livongo deal as well added to that as well. So yeah, that's probably a bit of a one-off, and towards this year you probably see it actually start recovering here, as you can see, and then probably by 2 years time we're back to where we were, which is good, and then hopefully we can start putting some profitability back in 2-3 years down the line. One thing with Teladoc that is different to a lot of other companies is that it's not normally this kind of the healthcare sector is normally an actual industry that I normally don't get that massively involved in, just because I like to buy in industries that I know very well, and healthcare is definitely not one of them. But the thing is like you're giving me here like the market leader, which covers so many services. It's easy to tell that virtual healthcare is something that will boom over the next few years. And this company is the first mover advantage on it. And you look at what they're doing at the moment with the amount of customers they're acquiring and the businesses that are using their services. You can see this company is going to do well. And I'm not exactly sure on an exit plan on this one, to be fair. I've actually weighed it up quite a few times in my head. I've gone, do I take this as a bit more of a disrespected stock at the moment that will come back up and go to about $300 a share and make about 100%, or do I actually hold this for like more of a 5 years down the line, and potentially this could be like a 100 billion company, where I think it will go, and that's what I'm kind of weighing up at the moment. So that's the only decision that I haven't made on this one, but I think it does have a lot of things going for it. Number 2, a company which I think I have finished buying now. I've got a nice big position. It's my second biggest position in the portfolio now. If you've watched the portfolio review, you probably saw that. I'm currently up about 10% on this one. My average, I think, is around about the $17-ish. And yeah, we've had a little spike up here. So while it's on this little run, I won't be buying any more now. I'm very happy with my position size. Very happy with the amount of shares I have, my average on the company as well. And yeah, this is one that I just think it's a 1.6 billion company. In my opinion, this is probably going to be a 5 billion to 10 billion company in the next few years with the partnerships they have, with the brands they have. And for me, the big thing they have purchased at the moment was New Foods Mexico, which I think brought where this company will be in 2025, actually to like 2023. So I think that was a game changer for me. That's when I actually thought, okay, I love Tattooed Chef, but when they bought that company, that was like, okay, this is now one of my favorite companies in the stock market. Make it a massive position, and that's what's happened. And yeah, I think this, I get really excited about this company. I think that when you look at the deals they're doing, you only have to look at the Target deal, and when they came out and said, look, this is the best frozen food product we've ever had in our store, and you think about Target, the amount of years they've been there, the amount of frozen foods they've sold, I was like, this is amazing. You look at the success they've had with Walmart. The more they increase these brand deals, the more it will do very well. I've covered this company so many times on the channel, so I'm not actually going to cover it too much today. But yeah, next up, Beyond Meat. So yeah, these guys have had a bit of a rough time recently. If I can just zoom out. Now, funny enough, I actually started buying my position somewhere around this range here. So this is when I actually started buying quite a bit. And around here, I think, is when they brought the next set of earnings out, and it went down to $120, and I was buying. And then we got kind of the Pepsi deal that came out, and this stock jumped up huge. Now, this is the prime example of that when stocks do this, when a stock goes up 62% within a month, you've got a question, okay, is that justified for a partnership? And I don't know if you guys remember, I don't know if I actually made a video about it, but you guys on the Patreon will know, this is actually when I actually sold a bit of my Beyond Meat position, because I went, that's just such a crazy jump. And worst case scenario, if the stock does carry on going up, I've still got a position there, a decent average there, but it's a very unhealthy jump, and what will happen, it'll probably pull back. Now, I didn't think it would pull back to this sort of range where I could go buy again actually below my average, but yeah, that's just a prime example of just always weigh up, okay, is this move a bit too much? Is it good to take a little bit of profit here? And then, as well as that, what happened then, we actually had the stock going down once again, another 40%. It's a very volatile stock, this one. And yeah, we're back down in this $100 range, and it's funny because this actually came after earnings, and what was in the earnings was like Beyond Meat are actually pretty much past the worst point of this pandemic. And what they should actually start happening now is the food service should actually start recovering. Now, for me, once again, if Beyond Meat actually does have a jump to 200-ish again, I would actually, that would put me up a good chunk once again. I'd probably actually trim my position, but I do believe that I'd still hold this position for a very long time. It's the cheapest it's been for a very long time, 6.7 billion market cap company. And like I say, the food service side of it is the part that's holding it back, and that should recover, and we've seen signs of it recovering in the recent earnings report as well. When we actually dig into the financial side of it, you can see here, if I just pop down to the growth side of it, this is where you can see the food service flatlining, but look at what this company's going to be putting in going forward on the revenue side of it, and also on the profit side of it. Next up, one that I've talked about quite a bit on the channel as well, which is DraftKings. These guys' valuation dropped quite a bit. They could potentially put in a billion amount of revenue as well this year. And yeah, it's been on a good run. Probably due a little bit of a pullback. We'll see if it kind of holds around here. But yeah, this is one that I was actually down quite a bit on, and I'm just keep buying. And their earnings will just stand out to me. When you look at their earnings with what the partnerships they've signed, 100%, 100% growth. Revenue growth, the states that are opening up in, and we haven't even got round to the peak NFL season yet, which we'll get in about a year's time with their numbers. Yeah, DraftKings is one that I'm just, anyone from the UK knows that this space, this kind of like fantasy sports, the online betting side of it, everyone knows that this is a massive growing space. We know for the US side of it that hasn't been allowed. On the UK side of it, we know the companies that have done very well. You don't have to look at like Flutter, for example, and I guess like William Hill. I think that's done okay. 888 casinos, and the thing as well is like they've some of them have been like brick and mortar stores, whereas like DraftKings is an online only company, and these guys have the. If you're in America and you're tied to online sports betting, the one partnership you want is the NFL. And who are the NFL's official partners for this industry? It's DraftKings. And yeah, I just think it's crazy. Like this is why I'm just focusing. This is what the difference is between like Gang and DraftKings for me. Is like I love Gang, but the thing is like it's providing a service to customers, and them customers could one day leave. Whereas these guys are the brand. DraftKings is the brand. The customers go to DraftKings, and whatever happens, they would still go to DraftKings, and that's in DraftKings' control. This is the market leader, and they've got one of the first mover advantages on it. And yeah, I just think that this is a future 50 billion, 100 billion company, for sure. And the last one, which once again is very much like kind of where I'm at with Tattoo Chef, is like I'm kind of happy now where I'm at with that one. And this is actually Tattoo Chef's probably moving off this list now, and I'm probably not buying any more. Whereas like Teledoc, I might buy some more, but it would have to go lower. Beyond Meat, DraftKings, I'll probably carry on buying a bit more at these sort of prices. G-Nog as well is kind of like now moving out of where I'm actually considering buying this one. Putting a solid earnings call, but yeah, it's been a bit choppy for these guys. Obviously, I started buying somewhere around here-ish, I think. But this company was once like a $26 company, and yeah, we're back down at these sort of prices. And it's crazy to think we're like a year on now, and the company's literally back at where it was a year ago. And you think, okay, is this company still at the same position it was at a year ago, or has it developed? And you think, well, it's now I think it's in like 3 new states compared to where it was at a year ago. It has plans to move into like another 8 new states. The revenue's grown on it. And it's like, yeah, the company shouldn't really be valued at where it was a year ago. But yeah, the earnings were pretty good. The thing as well is the thing about Golden Nugget compared to like a DraftKings and Gang is like, once again, even though it's all in the same industry, Gang's more like a platform for, like your Churchill Downs to go onto the stock market and everything like that. DraftKings is more like fantasy sports and sports betting. And Golden Nugget is actually like the casino side of it. So even though they're all in the very similar industry, and they probably all get tied together, and if the whole industry has a bullish month, they'll probably all go up. If it has a bad month, they'll probably all go down. But they're actually all like not really competing against each other. Whereas something like a FanDuel would be, a Penn National would be, more competing with like a DraftKings, for example. They're all very unique in these sort of industries. And Golden Nugget is more casino based, which is the more profitable side of it. And also just on DraftKings side of it, I see a lot of people coming out about DraftKings not being profitable, and people forget like their New Jersey state is profitable in like 2-3 years. So DraftKings can get to profit once it matures, and that's the thing people forget is like the big expenses for these companies right now is like acquiring customers, and once they that state kind of matures, then it gets to profitability. And it's same with Golden Nugget, they've done it in New Jersey. It's same with DraftKings. That's profitability, and that's a competitive state with all the same competitors in, and that's the one bearish argument I've seen used against these companies right now. And yeah, Golden Nugget is more casino based. I think 974 million market cap company, not too badly valued at the moment, and yeah, I think these guys are going to put in good revenue growth. Shouldn't take them too long to get to profitability, which they once were as well, but because of the big massive expansion they do. People think people or bears sometimes, I think, and investors can be very guilty of thinking these companies can expand at this massive rate and then still stay profitable. Like, it's very tricky. If you're expanding marketing and all that, they're putting a lot of money in, it is going to come back at them at some point. But yeah, there is a clear path to profitability. And yeah, these guys at the moment, while it's at this sort of valuation, I probably won't buy too much more. When it got to $11, I was like, this is crazy. That I was just like, buying that one quite a bit. But yeah, this is probably one that's just I probably don't have plans to buy anymore unless it goes lower. So it probably comes off this list like Tattoo Chef. But these are the 5 companies I've been focusing at the moment. Like Golden Nugget, I didn't really have plans to buy anymore, but just because it went so low, I was like, yeah, I'm buying that one. So yeah, we'll see where we're at. Like I say, Teledoc, Beyond Meat, DraftKings is probably still that I'm still looking at. I'm thinking I could buy a few of these, and then yeah, I'm probably going to judge where the portfolio is at, and then I might consider some some gang after that one. We'll see where it goes from there. Considering a few UK companies, but while the US growth stocks are sold off like as much as these are, no offense to the UK companies, but them UK companies can put in some decent returns. But we're talking about future 100 billion market cap companies here that are sold off at a massive range. And while that's happening, I'm buying them, and we'll see where we go. I think we are starting to see a little bit of leveling out. We'll see if it holds. But I don't know how much lower some of these can go, because you're talking a lot of these companies like Gnog, for example. You're talking a lot of these companies have lost nearly half the value within a couple of months, and yeah, I think some of them are just at crazy valuations. It's not just the ones that I'm talking about as well. It's like there's a lot of other great companies that are sold off. Like I said, there's plenty of other companies that I've considered buying that have been sold off over the last few months, but I just haven't. These guys, one that I've considered heavily, these guys were down 25%. I know Palantir's been a popular one. There's been a lot of companies that you could have picked up, but anyway, those are ones that I focused on. So anyway, hope the video was useful. Thought I'd do a little bit of an update what I have been buying anyway. And like always, if you do want to know exactly when I am buying and selling, the Patreon is the place to be. But yeah, hope you enjoyed it. Anyway, if you could smash the like button, let me know what videos you want to see, and if you're new and made it all the way to the end and found it useful, subscribe, and I'll see you in the next video.